Hi there. Very good morning, good evening to all of you, depending on wherever you're watching me. This is Simply Stocks, and I'm live in this live session as promised around 10 o'clock in evening today. So I'm going to discuss about one important point that is about the markets and where it is headed over the next 4 or 5 years. Plus, we'll discuss about the way I do short-term trading, or I used to do short-term trading, which I'm not doing at the moment. But this is one way of trading in the market on a short term basis that could help you going forward, and how you can probably make some money and yet stay invested in the market as well. So let more people join in. It's a Thursday evening. Hopefully, more people will join in, and that's why I'm having a night session. Normally, I have it in the afternoon, but I keep having these sessions late at night because I want more people to join in and understand the discussion that I want to have, and spread the knowledge whatever I have with me. So kindly subscribe to my channel, hit the bell icons so that you get my videos straight away when I post it, and like the session as well. I hope investment and trading is going really well for you. I'm seeing, and we are seeing tremendous, you can say, a move in the market, and market is what I'm going to talk about. So basically what has taken place over the last 10 years, I'm going to discuss that 10, 12, 13 years, and then I'm going to probably analyze as to where we are headed over the next 5 years. So if we go back and let's begin the session in earnest. So I'm going to discuss about where the market is headed in the next 5 years, and then I'm going to discuss about that short-term strategy on booking profits in the market. So when you look at 2007, 2003 to 7 bull run, so I was looking at it just a couple of days back, and what is startling is that in that bull run I was not present, but during that bull run of 2003 May till 2008 January, so it was a bull market of around 4 years and 7 8 months. The market went from around 970, that's Nifty, to 6,200. So it was a move of 6.5x, means the market became 6.5 times to what it was in 2003 May. So that was the kind of bull market we saw. So if we take probably 2020 uh, March low, which was 7,500 as the base, then we are looking at something like 45,000 to 50,000 over the next 5 6 years. See, from 7,500 we are up something like 130% to 18,000, and 120%, actually 120% to 18,000. And that bull run was of around 650%. So uh, we if we consider that as a benchmark, we have a long way to go. uh, and why I believe so is that in that period we were having, in 2008 we had a growth rate of around 10%. In 2019, we had a growth rate of 4.5%. It is expected to touch 10% over the next 3 4 years. It is expected to touch 7 8% over the next couple of years or so. Over the next 5 6 years, I think we could be headed towards 10%. Another reason why I believe that such kind of bull run could be upon us, and probably we are at the beginning of something of that sort, is that if you look at the EPS in 2008 or 7 and 8, it was around 230 rupees and 225 to 30 rupees, and the market was trading at 28 times at that point of time. That was when the market peaked, 28 and a half times. The earnings have tripled, so it's going to be around 700 rupees this time around, and the market itself is about to triple, so 6,150. A triple of that would be 18,500. We are headed towards 18,500. We are nearly there, 18,500, 600. But how long it has taken from 2008 January for this mark to come about, we have taken something like 13 and a half years, more than that, nearly 14 years to reach there. Now that shouldn't have happened. So basically, if you consider the formula and if you consider the norm, which says that the market doubles every 5 years, and if we consider not 6,100, but let's say 5,500 as a market, you can say nearly top or medium level, average level of 2008, then over the last 14 years, say 2007 November or so, over the last 14 years, the market has only gone up, you can say thrice, whereas the market should have gone to something like over the next 14 years. So after 5 years, market should have doubled to 11,000. That is by 2012-13, and by 2018 we should have been around 22,000. So we are still far off from where we should have been, considering the kind of potential we were sitting on in 2007-8. Yes, earnings have faltered time and again over the from 2011 till 2019. We had only earnings mismatch, and the earnings didn't grow at all. It was between 450, 500 to 450, 550, something like that. Now we are breaking out to be around 700 rupees. So this is another reason why I believe that the market should have been somewhere around 22,000 by 2018 if that norm is taken, that okay, market doubles every 5 years. That's around, that's a growth of 14-15%. That's just about it. Not even that has taken place. And if that is taken into consideration from 2007, so as I mentioned, so by 2017 we would have been around 22,000. By 2022 we should have been around 44,000, but that doesn't happen unless the earnings come through. So the earnings didn't come through. Now, the third reason why I believe that we could be beyond 40,000 in the next 5 years on the Nifty is because of this earnings things altogether. And this is the biggest reason why I believe that we are headed towards 40 or 42,000 on the Nifty in the next 5 years. We are having an earnings of 660 rupees currently. We are expected to touch 700 by the end of the year. A 20% growth on that would take the earnings to around 840 rupees by FY23. And if we consider 18% earnings growth for the next 4 years, then by FY27, that is in 5-6 years' time, we should be headed towards 1400 rupees. And if we consider 1400 rupees as a norm, by 26th December, that is FY27, then 1400 multiplied by 28 times earnings would get you to 40,000. So 40,000 is something that is very much achievable if we are having 18% CAGR growth from say FY23 onwards, which I believe is very much possible because of the low base and because of the kind of trajectory in the economic growth that we are seeing. So that is why and most of the members on Patreon, as well as some members who have become members on YouTube with the join button, would have seen that I seldom change portfolios, although I have done that. But I keep it with 4 or 5 stocks, and I'm trying to hold on to them from a longer term point of view, because I believe that most of the money will be made by those who can stay put with their investments, good quality top level companies, over 4, 5, 6 years, because this market will fall. I mean, there's not a reason that the market will not fall over the next 5 years. You'll see at least two falls of more than 20%, but that will be opportunity to buy. So 20-25% fall in the market over the next 5 years, at least two of them would take place. One of them might take place over the next 6 months, and then another would be around 2024. But I am looking at a situation where by 2026 you could be looking at a market which would be at least 2.5 times from where we are today. So we are on the cusp of a major bull run that has begun from March 2020. that has been here for the last 18 months, and people are thinking that okay, it's already so much, so let's sell, let's book profits here and there and all. But I think this is going to continue. FIIs and DIIs would come in at higher levels, and the market would continue to surge. So let me know what do you think about my point of view of 40,000 on the Nifty in the next 5 years, and what are your thoughts on the growth rate that I have projected? Only 18% from current levels. CAGR would get you to 40,000 by 2026 December. Uh, Now, second point I want to discuss with you is about short-term trading. So this is the mainly an assessment over the next 5 6 years as to what the market would do. But what is the scenario if the market falls immediately, say in the next month, or if the market falls big time over the next, say, 2 3 months, or the market doesn't perform? See, basically, what I follow with short term trading is that if you are buying something and you believe the stock is going to go up 20 25%, whatever surety that you consider that the stock has for going up, just keep that as your, you can say, prospective profit or potential profit. So for example, I buy some stocks, say a DMart, which is at 5400, and I say, and this is just an example, no recommendation or anything, but you buy at 5400 thinking it will go up 20%. So suppose it's going to go up something like 1100 rupees to 6500, then you keep a stop loss of somewhere around 5%, and that's just about it. So you keep a stop loss around 5100 and or 5150, and just trade your luck, and let's see what happens. And once that 20% is hit, you just book your profit. So normally I follow the strategy of buying something with an idea of making 20 to 30%. If I'm able to make that 20 30% quickly, if I'm able to make that 20 30% over 1 month, that's good. If I'm able to make that over 3 months, that's fine, unless the stop loss is hit. And if you're making 30%, 25%, 20%, you need to take your profits off. I know that most of you would have bought some stocks in metals earlier, some stocks in chemicals earlier, would have been making 60 70 80%. But then what happened was uh, eventually the stocks fell, and now you're up, say, 40% or so. So the best strategy to do it is always trade into the market or stocks with an idea of making 20 to 30% on your trades. And once you make that, just book profits and move on to your next trade. And rather than thinking about making a lot out of it, unless you are looking to invest into the stock, then there's a different strategy altogether. Then you need to look at what could be the growth over the next 3 4 years, and where the stock would be, say, 4 years down the line. If you're able to like gauge that, then probably you'll be able to finalize a price point as to where the stock would be and what kind of returns you're going to make. Unless you are able to do that, probably you follow the strategy of making between 20 to 30% and taking your profits off, and having a stop loss of one fourth of it. So if you're having a target of 20%, have a stop loss at 5%. If you're having a target of 30%, have a stop loss of around 7 to 8%. If you follow that, you'll in most cases make money, able to get out easily and book profits and make good amount of money. In order to make money wise good profits, you need to put in better capital, otherwise you will not be able to make a good amount of money through trading. So that's the call on trading perspective. Now I'm ready to answer your queries. Kindly use the super chat super sticker feature. That will help me grow the channel. That will help you also ask me questions and eke out answers in greater detail. Also, you can join on YouTube. So you can hit that join button and join on YouTube with a monthly payment, easy payment through Google Pay or UPI, and get all the benefits of Patreon, plus one live session every Friday that you'll be having live. I'll be having live sessions with only the YouTube members tomorrow. So every Friday. So this next one would be tomorrow around 9:30 or so. So I'll have that. See, Britannia, you could exit around 4,000 if you're in short term into the stock. It will not move unless the market falls. So basically, it's a defensive stock, just like Nestle is not moving another kind of higher or you can say larger FMCG counter. So probably if you're in it, hold on to it. It's a good long term portfolio stock. Dixon is headed towards 6,000. We'll see it from there. How Dixon performs from 6,000 onwards and how the results of September quarter has been. MGL will only perform when it crosses say 11:30, 11:35. Below that, it's weak at the moment. Kelpes looks fine at these levels. If you have it, hold. If you don't have it, wait for 470, 480 to buy. There is no news on it. I can't see it going past 530, 540. I can't see it going below 470. So these are good levels to accumulate from a 3 4 year point of view. Camps look good at these levels to buy. See, IT has taken a back seat, especially mid cap IT. Large cap has done reasonably well over the last 3 4 days, but mid cap IT has not done that well. But this is only consolidation that is taking place over the next 3 4 months. It is going to do well. Say IRCTC. What I can say is now is that wait for the split to happen, some fall after split, and then buy into it. That's the only call. The way it has moved or rocketed, literally, I won't be I won't be saying that you buy here for from a short term point of view. If you have a 4 5 year time frame, yes, these are good levels to buy. I still believe it can be a 2.5 to 3 lakh crore market cap company over 4 5 years, but at the moment I won't say that you buy from a 6 months point of view. There could be some decline in November. Right. Gujarat Gas looks reasonably valued. See, all gas and oil and gas companies, say apart from ONGC or BPCL, most of them are not moving that much. In fact, are underperforming. So be careful in those. The first big move has already taken place for the year, so I won't be surprised if these stocks do not perform. So if you don't have it, don't buy into it. If you have it, hold. Okay. Paras Defense is a good stock to buy, but again, it's a portfolio stock, something you need to buy, hold for 4 5 years, not something that you can trade. Absolutely not something that you can probably trade into. Tata Power now, I feel that around 200 would be good levels to get into some kind of decline and then you get into it. DMart is ultra expensive. Let results come out, let everything come out, let reaction of results happen on Monday, and then we'll see how DMart performs. I think it is extremely expensive at these levels. Igarashi Motor is a good one from a cyclical point of view, from an economic, you can say, recovery point of view. Again, the stock has already performed, so I won't say you buy here, wait for some decline to buy. Mastec looks good for 4,000, 4,200. These are good levels to buy. I think if you get opportunity to buy at 3,000, even better. So once results are out, if it drops to 3,000, 2,900, you do buy into it. Looks good. Grand Pharma is a very decent company, but Pharma has taken a backseat, as I said, most of the IT has. So these are times where you can accumulate it every week or on major declines, Gland Pharma, and then wait 2 3 years, it will perform big. Don't have a view on Apollo Hospitals at these valuations. I would say expensive. Wait for some decline. I like other hospital companies more than Apollo because of its debt, etc. So won't consider buying into it. Yeah. So Loris Labs looks set on a breakout. I think 730 is the next level, and then we could see 820, 830. I think the consolidation is about to be over. So if you want to buy, yes, with a stop loss of 620 can be bought. 730 is possible over the next 2 3 months on Loris. Cyient is also good from a long-term point of view. Many of the mid-cap IT companies like Cyient, like Birlasoft, like Happiest Minds, etc., they look very, very attractive now after consolidation. Some of the IT companies have gone up. Mindtree, like uh, they are expensive, but most of the IT companies are trading at decent valuations. A VIP, say the first big move has happened, wait for major declines to buy into something like a VIP. All right, guys, thank you. Thanks a lot for being online. Would be online on Sunday afternoon from a longer term, from longer time point of view. Sandesh, thanks for your contribution. Kindly do subscribe to my channel and hit the bell icon so you can get my video straight away when I post it. Join on the YouTube through the join button and join me on Patreon if you can. So hopefully see you there. Thank you.